Thank you so much for joining us today. I'm Katie Lyles, the Events and Marketing Coordinator for LGT. Today we'll be discussing a very interesting topic for the not-for-profit industry, grants. So I am really appreciative of both speakers who are presenting today. For those of you who don't know, LGT is a full-service accounting firm located in Uptown Dallas. We serve small to mid-sized businesses with assurance, auditing, and tax work. We are so grateful to offer countless opportunities to gain CPE credit this year, and we will also be offering a live in-person event for not-for-profit in November. So make sure that you are checking our events page and you're registered for our marketing emails. So if you have any questions about our events or any of our services, you'd like to set up a free consultation, please reach out to us at askus@lgt-cpa.com and we will get back to you as soon as possible. I'm so excited to introduce to you today's first speaker, Elly Tittle. She is from EHT Grant Consulting. She started this company about 3 years ago and she has a background in finance. She wanted to combine her business experience with her love of volunteering, and I absolutely love that. So thank you so much, Elly, for speaking today, and I will let you take it away.
Thank you, Katie. I really appreciate that introduction. Good morning, everyone. I'm going to shut off my video here and we'll get started. So as Katie said, I'm with EHT Grant Consulting, and just a little bit about me. I was in finance for years. I originally started in journalism. And a few years ago, when looking to make a job change, I instead decided to make a career change. And I decided to take the years of volunteering that I've done. I've been a volunteer since high school, and my business background, because I felt that would be very helpful, and the journalism background, and combine all of that and help nonprofits help others. So with that, I started the grant business. And since then have helped clients not only in the DFW area, but I also currently am working with clients in a couple of other states. So it's been very rewarding and I've really enjoyed it. And I'm very happy to be here this morning and share some of the information that I have about grants to help all of you, whether you're going to start a grant program within your nonprofit, or if you already have, maybe add to that. So let's go ahead and get started. Sorry, there we go. So the agenda today, we're going to look at some grant statistics. We'll look at what grant readiness means, types of grant funding, the grant process, and writing the grant. As we go through here, after a couple of sections, I'll stop, and Lucas, if anybody has any questions, if you could just ask those, or we, when we get to the end, of course, there'll be time for more. So a few statistics. There is a lot of money that's available for grants and for gift giving. Foundation giving exceeded $75 billion, and that was 2 years ago. That's a lot of money, but a lot of people don't know that's out there, or it's difficult to get to. They don't know how to find out, where that's available and how to apply for it. And we're going to go through some of that. As of last year, only about 32% of foundations provided general operating support. And we're going to talk about the different kinds of grants that you can get. General operating would mean that you could use that money pretty much for anything. A lot of organizations, that's what they want, so it's not restricted. But foundations, of course, want to see that their money is being used specifically. And so they're restricting that. However, if you look at that, about 30% of $75 billion still is a lot of money that's available for these type of grants. There are more than 900 federal grant programs, and the federal government, you can see, distributed over $700 billion to states and local governments. A lot of the grants coming out of the state and local governments actually are federal money also. So they're going to have a lot of the same restrictions and requirements that you will get if you went straight to a federal grant. The first thing to determine before you get into this is your organization grant ready? And whether you do a very short grant request or whether you do a very extensive grant request, a lot of these questions have to be answered before you actually go into doing grants. One of these is, how long has your organization been in existence? There are some foundations that will not grant to an organization that hasn't been around for at least a couple of years. So have you been around for a while? Because you're going to probably need to show some results on how effective your services and your programs are. You must have a mission and vision statement. I don't think I've done any grant that doesn't ask almost in the first question, what's your mission statement? So you need to have that. You're going to need to know how many people you serve and what are the demographics. Again, this is very important information that's in most of the grants that I do. If the foundation is targeting certain portions of the population, they want to make sure that the people you serve are part of those demographics. And so you need to have that data and be tracking that. You're going to need goals, objectives, outcomes, evaluation methods, everything to be able to show that your program and your services are effective, and therefore the funders are comfortable with feeling that the money that they're spending is being well spent. And we're going to talk about what are the differences with some of those. Within the past results, you want to be able to write and say, I've been able to reach this many children and raise their learning levels. What other sources of revenue? A funder normally does not want to be the only one supporting your organization. It's a liability for them. They don't want an organization coming back and saying that it went under because you decided that year you were not going to fund them. So because of that, they will often ask you, who else have you applied to? I'm working on a grant now, and one of the questions is, if we don't give you this money, what will happen to this program? So they want to see that you're going to other groups to ask for money. You're going to need budgets, of course, and this probably goes without saying, but also if you're going for a specific program or project grants, you're going to need budgets for those as well. And I know that often becomes more difficult to allocate out and figure how much money is going where, but the more you can do that, the easier it's going to be to write a grant application. And if you brought in other grants, they're not only going to ask, who else are you asking money for, but who actually funded you and how much did they give you? So the types of grant funding in general, like we talked about, general operating, least restrictive, usually covers all administrative expenses. Occasionally, they may say we don't pay for salaries unless associated with the programs. But for the most part, if you get general operating, they're just saying, here's money, go spend it as you see fit. I've had a client that would go for almost nothing except for general operating. Again, not as many foundations are giving these, but it certainly makes it easier. It makes accounting for how you use the money much easier. Program project support, and these are restricted. They have to be used for the specific purposes that's described in your grant request. And you have to be able to track that. So you have to make sure you have, back to grant readiness, you have systems in place to make sure that you can track where that money's going. So when you either ask for a renewal grant or you do a report to show where you spent the money, you're able to show this. Research, these are pretty specific grants. Again, they're usually health-oriented foundations for research, which I either call that. And they're often very large dollar grants. These are the ones your medical centers are going to go for, cancer foundations and groups such as that. And matching grants, the nonprofit has to, of course, match the same amount of money. Sometimes these applications you won't even ask for an amount. It will just say, we will fund you up to, let's say, $20,000 if you can match. So however much you can raise, we will match that amount of money. So the other question you have to answer is, do you want to go for government as well as foundation and corporate grants? Do you just want to do foundation and corporate grants? I only do foundation corporate grants for my clients. Most of them are small to medium size. They don't have the structure in place. Like just about every nonprofit I know, they certainly don't have extra staff that has extra time. And these government grants take a lot of structure. They require a lot of tracking and a lot to just even to apply to them. And so therefore, most organizations don't have what it takes to get into them. I spoke to one nonprofit, the prior person before this development director was in place, had gotten them a state grant, and now they were struggling to be able to use it the way they were supposed to. And we'll talk about that in a second. That can create a lot of issues. These applications can be very extensive. They require significant time to complete. And I saw this one estimate that a federal application can take between 80 and 200 hours. So unless you really have a grant team, it's going to be difficult to complete these. If somebody's just doing a grant writing as part of their job, you're using even a grant consultant that's a sole proprietor, it takes a lot of time, and you're investing a lot of money up front to get them. Now, that usually the grant amounts are quite a bit of money on the back end, so it might be worth it, but you have to take this into account up front. One grant consultant I know said one of the federal applications they turned in was 70 pages long. So these are very extensive. It requires meticulous tracking and reporting. The federal grants often require in-person, or now I guess virtual audits, but you have to have all the documentation to show how that grant has been spent. Any inability to verify spending or spending other than what was proposed could result in a requirement to return the grant funds. Now, foundation can also require this, but chances are less. It's much easier to reach a grant program manager within a foundation than it is in the federal government. Which brings us to the next point, which if you have to change how the funds will be spent, there's often a very onerous process to go through to request that if it's a government grant versus if it's just a conversation between you and the program office in a foundation. So that's something to keep in mind if you run into an issue with how you're spending the money. And foundations and corporations, they often will require a short report of how the money was spent. But again, there's a 1-2 page reports. They're not another significant amount of time to complete a very detailed report back to the government. Now, it's not to say that you don't want to go for some of that money. Like we saw in the statistics, there's a lot out there from the government, but you really want to take all this into account before you get into it. Now, you also want, as you're looking at grants, you want to determine if a grant is applicable, because you want to not want to be chasing grants that you really don't have any chance in getting. And the first thing to do is make sure the funder is open to accepting any request, or are they noting that it's only by invitation? And I'm seeing more and more go only by invitation, primarily because they're getting hundreds and even thousands of grant requests, and they just don't have the staff to be able to review all of them. If it is limited to invitation only, it doesn't mean that you can't try that. You may have a board member who actually has a contact at that foundation or in that corporation. They may work for that corporation, and they can get you in. You may know another contact to get you at least in the door to talk to somebody at the foundation, unless the funder states no contact is to be made. And I have seen that in some 990s and in some databases where they tell you about the grants, or even on their websites, it will say by invitation only and do not contact us. And in those cases, they pretty much know who they're giving to. They give to the same organizations every year. And so they really don't have the time or the staff, to entertain other ones. But it is worth reaching out. Sometimes you can reach out with a letter, an email, and say, I think that what our organization does is in line with what your foundation's mission and visions are. And, could we at least write you just a short explanation of what we do and see if we might be able to send you even more information. And sometimes they say yes. Do your organization's services meet the funder's main grant priorities? If the funder is funding health services and your organization is animal welfare, don't try to make it fit their priority. I mean, they can see through that, and you're wasting your time, you're wasting their time. So make sure that, they're funding, and really, and we'll talk about how you get this information, look at, it's what your organization does in one of their main priorities. If they do animal welfare, but it's way down and they've given one $2,000 grant out of $300 a year, it's not worth your time. And does their grant meet your needs? I'm a consultant, I charge for my time. If I'm asked to do a grant and the most they've ever given is $1,000, it just doesn't pay the client to pay me to do that. And the biggest one is the amount of the potential grant worth the time required to complete it, and the follow-up requirements. Sometimes you have to wonder, you look at these grant applications, and in fact, I'm filling out one now. It's several pages long. They're going to want a grant report at the end of it, and they give $500 to $1,000. You could be spending time on one that's going to give you $10,000, may or may not want a report at the end of the time. So you really want to vet these and make sure that your time's being well spent. Again, nobody has, extra money for expenses or extra time from staff to be able to do these. And do you have an existing program or project that matches the grant eligibility? I will tell you, I have not seen it ever be successful where you find the grant first and then you decide to create a program for that grant. It's going to come through that you're just trying to force the match. And so make sure you've had this program in place, or if it's a new program, and they will fund new programs, but make sure that, you've got a plan around it. You've got objectives, you know exactly what you're doing. And this was all underway before you found this grant that was going to help fund it. So now we're going to talk about setting up a grant process. And I highly recommend you set up the process in advance of starting to go for grants. In a way, it would be like starting to spend a lot and not having a chart of accounts, and then going back, afterwards, after you already have 6 months of expenses, and trying to match up all those expenses in the right categories. And, it can be done. It probably is being done, but it requires a lot of extra effort. So if you have your process in place, at least the initial process, you'll tweak it, you'll make changes as the grant, program grows, but at least have these things in place so that you can start being very structured about how you go about this. First one's roles and responsibilities, because you're going to have to determine, do you have individuals, employees, or even volunteers on staff who have time and the ability, the skills to do the things that it requires to go for grants. If you don't, then do you want to hire somebody, maybe part-time at the beginning? Or if you don't want to bring somebody on board and, have that commitment and the benefits and every taxes you have to pay for an individual, do you want to go with a grant consultant? So once you determine roles and responsibilities and who will be doing this, then you can decide how do you want to staff that position. So you want to look at who's going to manage the process. And this is the whole process. You're going to need a grant calendar, which we'll talk about. Keeping up with deadlines, communicating with the organization's staff, communicating with the funder. There's a lot around managing this. And again, how detailed it is depends on how large of a grant program you want to undertake. If you're only going for 2 or 3 grants a year, this can be pretty minimal. If you want to do 2 or 3 grants a week during the year, then this is going to be a lot more extensive. Somebody needs to research potential grants and make decisions on which grants to pursue. It's probably a joint decision. What I do with clients when I do the research for them, I put together a spreadsheet, I give my opinions, and I sit down with either the executive director or the development director. We go over them and decide, and then we start answering the questions that I just reviewed, which, does this make sense to go for this grant? Is it worth the time? And so forth. We prioritize, and then those go on the grant calendar, and then we start pursuing them. Who's going to provide input for the data required? Your program directors and managers are going to have to be involved in this. They're going to have to give details about who they're serving and who their population is, who the clients are, how many meals were served. They're going to have to provide updates. Things change. You don't want to be in the middle of a grant, and this happens. And you're saying that, we're serving so many people and doing these services, and they come and go, oh, we just changed the program. So you want to be in close contact. So you have to identify who within the organization is going to be providing various data for the grant. And do they have the time to do that? You want to give plenty of, upfront notice for them to be able to do that in addition to their regular jobs. Have to write the grant. So of course you want somebody, who's a pretty good writer to do this. There's not a lot of work on the back end. And then somebody else to review and edit and approve it. So whoever writes the grant, you always want to have somebody else, second pair of eyes looking at it. And then you want to track the progress of all your submitted grants. Should we have heard back? If you get a rejection, making sure you note that, why the rejection. If you get a rejection without a reason, following up with the funder. Sometimes they'll tell you, sometimes they won't, but you always want to ask so that you can improve your grant applications going forward. Then, of course, you have to track how the grant funds are spent and the impact of the donations, because you'll need to report on that. And you'll also want to use that if you're asking the same foundation the next year for a grant again. You thank them for the grant and then say, and here's how your money was spent, and give them some statistics, and then ask for, that current year's gift. And then, of course, somebody to complete the final reports to the funders if it's required. And again, this will require not only the person who writes it, but the program staff to provide the details of what happened within those programs and those services. Next, you're going to want to look at how are you going to research for grants. So again, unless you already know, you may know there are these 2 particular grants I'm going for this year. This isn't an issue. But if not, and you want to build a pipeline, then you're going to want to look at setting up your databases. Most of these databases, in fact, all have a subscription fee, and it can be costly. They can be a couple $100 to, there's one I just heard of, it's $9,000 for 6 years. So you're locked in 6 years, and that's a lot of money up front, for a nonprofit to have to kind of fork over for a database, and then not even know if that one's going to be helpful for you. They do provide many funder details. They have funder priorities. They will often list grantees, prior grantees, and how much. They give you access to the 990s all in one place. You can get to those, but it's all right there. It'll tell you board members, it'll tell you requirements, grant range, and so forth. Now, the applications I am aware of all are based on data provided by the nonprofits. And I think they also get they will research some of the 990s themselves. Usually some of this data, most of the data is a little dated. 990s are usually a couple years old that are posted. And if the foundations are not providing timely data, then the information you get is not going to be the most current, but it's going to be better than trying to get it yourself by Googling, which isn't very successful. So these applications are very helpful. You just have to use a little bit of a grain of salt that things may change. If you're using an outside consultant, you want to make sure, this one of the questions you want to ask is, what databases do they have access to? Because if they don't, they're not going to be able to provide you with good grant prospect research. Currently, for example, I have a foundation directory in GrantStation, but there seems to be quite a few new ones coming aboard. So, you always want to kind of stay on top of that, but you want to make sure, I would say at a minimum, that they have access to at least 2. Now, there is a free resource most people don't know about at the Downtown Dallas Library. With COVID, I know they were shut for a time. I think they may be open on a limited hour basis now, so you would need to check, but they have free access for citizens to FDO. And you go down, they actually, on one of the floors, I think 6th floor, they have a bank of computers. Most people using them are job hunting, but they've set aside 2 of those computers only for doing research on Foundation Directory. And you just go up and say you'd like to use it, and they let you use it for an hour, or if you want to extend, they'll let you use it for a couple hours if nobody else is asking. And so if you don't have a real large grant program, you could just have who's ever doing your grant writing go down maybe once a quarter to do some grant research, and then you wouldn't have to buy a subscription. They also, part of one of the floors actually has a large section of books on grants and fundraising, nonprofits. And they have a grant information specialist. And Jill is extremely helpful. I met with her right when I started all of this, and she sat down and spent a couple hours with me. And they were offering free classes to the public. One workshop was on using mapping. It was very interesting, using a mapping tool to get data to make your grants more interesting. One was on applying for federal grants. I don't believe they're doing these right now. Hopefully they'll start them back up. But if you get on Jill's list, you will get emails. If you do that and you're interested in the particular workshop, contact her right away, because these fill up very, very quickly, because they are free and they're very good workshops. And so getting to know Jill is a really good thing to do, because she's very informative and you can get a lot of good information from her. There are other sources for funder research. Like I said, you can Google. Many funders do not have websites. The smaller ones, these small family foundations, the only thing you're going to find out information from them is from 990s. Again, 990s usually are several years old. You can go into Charity Navigator to look them up. You can go into the IRS to look them up. And really, you can't search as you can on those search engines. You can't search and say, I'm looking for foundations that fund, animal welfare in Dallas, very specific criteria. So the 990s really are only most helpful if maybe you've heard of a foundation that may be giving, maybe a board member has mentioned something, another nonprofit, has mentioned something. But that's where you're going to find some information. You're probably familiar. The 990 will say whether it's by invitation only, or will say, here's the person to send an application to. Grants.gov will list your government websites and grants, and you can also set alerts up within some of the government websites, and it will just send you, weekly lists of what's available. And then use your local relationships, Communities Foundation of Texas, other nonprofits that foundation press releases. If you know of a few foundations, get on their mailing lists, and so that you can get information. Once they know you, often, these foundations will send out something and say, we're opening up this grant, and give you details that way. And your board members, if you have a very strong board who are in companies all over this area, many of their companies probably offer grants, either through corporate foundations or just from the corporations themselves. But you need to really tell your board members what you're looking for. For one client, I was writing a grant, and I realized that the board member actually was the general counsel at that company. So I told the development director, has she said anything? And so the development director goes back to the board member. The board member was not even aware that her company gave grants. And so she went back and helped, and then opened a door. So you really have to, help tell your board members what it is you're looking for, and have them go out and, look around their companies or their contacts, if they're on other boards and so forth, and help you with this. Grant calendar, very important. You need a way to track this and funder data. So establish some kind of database that has all your funder information, your details about your grants, your deadlines, and so forth. Unless you have a big grant program, I'd say at the beginning, Excel works great. It's easily updated and shared. I think most people know it, at least at a basic level. There's no additional cost, because I'm sure everybody has Microsoft Office. And it's very easy to set up, and you can really customize it easily, if you have somebody who knows Excel. So I would suggest starting with this. Again, unless you already have a large grant program, this is going to give you everything that you need at no additional expense. There are a number of companies providing database software, and more all the time, because it seems none of them meet exactly what every grant writer wants. And so I know one grant consultant, she just went out and created her own, and she's now marketing that because she couldn't find a software package that gave her exactly what she wanted. They are very efficient handling large amounts of data and producing reports. Of course, they have subscription fees. And as you know, with any outside software package, there's system integration, which brings its own challenges and issues. There's user learning curve. There's a whole host of things. Plus, if it's in the cloud, if that software vendor goes down, then your whole system's gone down. So there are a lot of things to think about before you go to an outside package. From the people that I know, I'd say that most of the grant programs using this are from your larger organizations, your medical centers, your school districts, colleges and so forth, because they are handling a large amount of grants, federal grants, a large amount of money, have lots of deadlines to track. But I'm able to use Excel. One client, I do about 80 grants a year, and Excel works just fine for that. So this is one consideration as you're setting this up. And as I mentioned before, you do want to set up your grant calendars, what they call the whole tracking. You want to set this up before you start all of this, so you're not having to go back and update and build from history. And this is just an example, and these are not all the columns. I just did a few of the columns to fit it on this, but I've got a grant calendar, and some of the hidden columns are things like who have they given to before, if they've given to the organization prior, if they did, how much. That makes it really easy to glance at when you're writing the grant. But of course, these are some of the most important ones. Who is the funder? When's the application open? When's it due? Firm flexible means what's their due date. So if there's no date there, it was flexible. The type, is it an LOI, which we'll talk about in a minute? Is it an online application? Is it just an email letter to the executive director? What is it? And then when was it submitted? When do you expect a response? If you know that, when did it receive? What was the response? I've got a note, column out to the right, put any other information when contacts are made with them. This should be your one place to go. You can filter, sort, do whatever you need to get information quickly on your grants and your grant process. And then another tab in that workbook, it would be a grant workbook, is funder research. And again, your name, you might do the due date, again, the type, what's their focus areas, what are your top focus areas, the total assets. And this one also has other columns with some more financial data to know, the grant range that they're giving, to decide whether or not this is something that you want to do. And from that, your funder research sheet, I usually pull those then. So I either then say, okay, this one's appropriate when I've reviewed this with client. These are appropriate to pursue. I move those over to the grant calendar tab. The ones that were not, I moved to a not applicable tab. And I just put the name of the funder, the date research, and why it wasn't appropriate. And there are all sorts of reasons. These are just some of them. Location, they don't even fund in the Dallas-Fort Worth area. Their priorities don't match. It's invitation only, and they don't want to talk to anyone. You don't meet the age requirements. The reporting requirements are so extensive, you don't have the structure track in place to do that. Whatever it is, you want to put that on there. Now, having said that, funders are constantly changing. They change deadlines, they change who they fund, they change priorities. They may decide this year they're doing animal welfare, and next year, because they have a board member who's very interested in senior services, they decide that they're going to fund mostly senior services. So it's worthwhile periodically on the ones that were borderline to go back on them and re-research them, pretty quickly, just to go through again and see if maybe something hasn't changed that you could move them to the applicable list. So I'll stop there for a minute. Are there any questions?
Yes, there is. Are there specific foundations or grants for startup nonprofits?
They're not specific. It would be more finding the ones that are a little bit more open. And we'll talk about that actually in a minute. It's a good lead in. When you do a letter of inquiry, some of these smaller, so if you're not asking for a lot of money, if you're new and you're just starting up, and there are a lot of these family foundations, somebody either still alive and set up the foundation, or someone passed away, and in the will set up a foundation, and they had some the services that they were very interested in, and they don't require a lot in order to fund. And so that's usually where a good start. Another place to go in order to build up your list of who is funding you, I have recommended to clients that they go get in-kind donations, because those are donations. And so one was getting food for, to battle food insecurity, but very small startup. And I said, go to some of the grocery stores, the local store, get to know the managers of your local store. They will give you in-kind food donations. Those can count, and then you can start building up the information that you need. So it doesn't need to be a particular foundation. It can be from other companies that will help you get started. So we'll talk about how a new nonprofit might get some funding to begin.
That's all of the questions for now, but I'll let you know if there's any more.
Okay, thank you, Katie.
Thank you.
So writing the grant, a couple of things in preparation. Again, even if you've researched and you've got all the details on your calendar, before you go to write that, look at that particular nonprofit, that particular funder again. Like I said, they will change deadlines, particularly with what happened with the pandemic. I was writing a grant, and right before, so I like to leave enough time for my clients to review, and we have plenty of time to get it in, and it's not a fire drill at the end. So it was about 2 weeks before. We still supposedly had a month, and went into the website again just to double check things. And they had moved up that grant deadline to 3 days from that point. They said they had gotten so many requests, they were shutting off the grant application period. And if you could get it in the next 3 days, they would review it. Otherwise, they would not. So deadlines, do change. I won't say frequently, but they do change. The priority may have changed. So if you researched it 6 months ago, and I just had one of these, if you researched it 6 months ago, you go and write it and went back in just to check and found out that they had totally changed priority. So you want to review and make sure that you still meet it before you even start. Determine what information will be needed from others in the organization and request the data in enough time to meet the submission deadline. So again, you don't want last minute, you don't want it to be a fire drill for everybody if you can help it. So the more information that you can get out to others in your organization, give them a deadline of when you need it, that's very important. And to be able to do all of that, like with any project, this is project management. Look at your deadline date, back it up. When will you need information from others in the organization? When will you need to get it written? When will you need to have it reviewed, and so forth, in order to submit at least 3 days prior to the deadline if it's online. You don't want to be submitting on that day. There's hundreds of other people doing the same. The system will go down. Many of the foundation websites, they're getting better, but many of them are a little bit quirky, and they will go down. And I've had them wipe out the information before. So you want to make sure you've left yourself plenty of time. If you're sending in regular mail, and hopefully hardly anybody's asking that anymore, but I've seen quite a few that do, and those need to be sent way in enough time. So now we're going to talk about letters of inquiry. And these are the ones I said there are ways to do smaller ones that you may be able to get even if you're a new nonprofit. Most LOIs are requests in letter format. They may be short online applications that are the first step in receiving approval to submit a full application. Those are kind of rare. Usually an LOI is the only application that you're going to turn in. And that way you can kind of structure it. Many of them have very few requirements. They will have a description of the nonprofit and its services. Oh, I'm sorry. The amount requested. Sorry about that. Having a little difficulty here. Here you go. The amount requested, how the funds will be used, include the IRS determination letter. And this is all that they will ask. So you can structure this LOI however you would like. This is where, if you're a brand new nonprofit, you may have a better chance. If it's a foundation that doesn't give a lot of money, it's a private foundation, they funded a lot of organizations with, $500,000. This is where you may be able to start getting some grants. You want to write your letter on organization letterhead. Pictures can make the LOI more readable. And a lot of times, in fact, almost always online, except in additional attachments, they will say, do not send pictures. So in this case, you can send pictures throughout your letter, make it readable. You want to have your CEO or executive director sign it. Often there's no limit, okay? But I would recommend limiting it to 4 pages. I went into a client who was sending out 11-page LOIs. And that really is too much. These organizations are not going to read that because they're getting hundreds of these. So I would recommend that you limit it to 4 pages. They will read it. And, then you might get somebody to actually look at these for you. Now, the content, like I said, it needs to meet whatever they ask, but usually they don't ask a lot. And usually you're going to find out what the content is on the 990. So it will tell you want to give an introduction. Who are you? Who do you provide for? What's the need in a sentence or two? The request, how much you asking? How will the funds be used? How will the funder be helping those people? You can say, with your generous grant, we will be able to feed, 100 more people this year who would have faced food insecurity. Provide the history and the mission of your organization. Again, just a paragraph or 2, doesn't have to be real extensive. Want to look at your services and your programs, your description of your program and project. Now, if you're only going for an organization operating grant, then you don't want to, you won't need to go into the program project description. And all the rest of these items will only be then for the organization. If you're asking for a program or a project, then the following items will be specific to that program or project. So the community need, your target population, your budget data, all of this will need to be specific to that program or specific to your organization. You want to look at your goals and objectives or outputs. And they need to be what's called SMART. If you're not familiar with that, it's specific, measurable, achievable, relevant, and time-based. And your output are those are specific measurements. We're going to provide 150 meals. We're going to teach 35 children how to read. Your outcomes are the impact of what you've done. And so that may be 95% of the children that we serve will increase reading level. And then, of course, you want to give the evaluation and show how you're going to measure that. And then a closing paragraph. For your full application, these must be submitted online. There are very specific requirements at what information to provide. They ask very specific questions that are usually particular to the needs of that particular funder. They often ask very detailed demographic data, and I'm seeing more and more of this, particularly even asking the demographics of your board members. Often the questions have word and character counts. In a way that can be positive, it limits how much you write. You have to be very succinct, but when they tell you to tell your entire organization history and program in 500 characters, that's a challenge. So just be aware of that. They often have help numbers for technical support, but will not provide guidance on the grant application. And they will say that. So you're pretty much on your own as far as how you answer the questions, and they're not always real clear. You want to answer the question asked, and this may be, and of course I will, but what ends up happening is, one, either the question is not real clear, or you have a bit of information that you really want to get across, but it doesn't fit anywhere, so you stick it in to another question. Don't do that. And the reason is a very sophisticated foundation actually is grading the grants. And they are actually giving you a grade. This question's worth 10 points. This one's worth 15 points. And it will be taken off if you don't specifically answer that question. So you want to make sure that you answer it very clearly, succinctly, and to the point. Limit the use of acronyms. Always write your grant narrative in Word and cut and paste it into the application. Because again, the system could go down and you will lose everything that you have just done. And like I said, you'll want to submit a few days before the deadline in case of technical issues. These are some examples of the usual application sections I see on online applications. Like I said, often demographics, if they're very specific to helping the low income, they're going to ask you for LMI. They may ask you for how many of your clients are eligible for free lunch. They'll ask ethnicity, gender. So they're asking a lot of demographics now. You know, who do you serve, the need, and so forth. And when you do need, you want to use a lot of statistics. You want to go out and do research and be able to point to various sources, cite the sources, tell what your source was. What makes the services your organization provides unique? They're asking this, you know, why shouldn't we give to somebody else? The use of funds, budget narrative, and partnerships is the other area that seems to be very important to a lot of these funders now. They are looking to really leverage the dollars that they're giving, and they like to see that you're partnering with other organizations in the area so that you can provide to a larger population of clients. And so if you have these, that's great. You want to call them out. If you don't, you know, it might be worth, and you haven't started for grants yet, it might be worth starting to build some of these, because it really does make your grant application much, much stronger. They'll ask for the funding sources you've already received, those you're asking for and waiting on. And the next one, how the funder is recognized, is an interesting one. I see this mostly with grocery store chains, banks, department stores. The retail organizations seem to want to ask how you're going to tell others about how nice they've been to you. So you'll want to have something about, you know, include your name in our annual report and in weekly newsletters we send out and whatever else. But you'll get this with retail funders usually. And then you'll have attachments, board of directors, you know, your usual attachments. Here again, when you talk about grant readiness, some of them will say if you don't have audited statements, you can send your last financials, your most recent financials. But some of them will say if you don't have audited financials, we won't fund you. So again, that's how they're sort of going through and deciding, are you stable enough? Have you been around long enough for us to provide, you know, funding, grant money? So you want to have all your financial statements available. And these are pretty standard in most of the online applications you're going to have to do this. Again, occasionally they'll ask for letters of support, which means they'll ask for a letter like from your executive director or from your board president saying that they support your requesting this grant and understand all the stipulations around it. So if you see that, as soon as you've gone through what this is going to require and you're setting up your grant calendar and all your to-do lists, you want to go ahead and ask for that to give whoever you need the support letter from plenty of time to write that. And that is a quick overview. Of course, there's lots of information about grant writing. There's a lot of specifics around whatever particular grant you're going for, but hopefully that's been helpful. And if you're new at this, that gives you information to get started. And if you have been writing grants and have a grant program, hopefully maybe that's given you a new idea or two to use to strengthen your program.
All right. So everybody should be able to see my screen. Katie, can you?
Yes, I can.
Okay, I just want to double check because with the presentation running, I can't see anything related to Zoom, so I'm kind of flying blind. All right, Well, Elly, thank you so much for joining us today. You've given us some really great information. I know that grants are such an important part of the funding for a lot of organizations, and so we're really glad that you were here today with us. I want to do a quick introduction on myself to get to know everybody. I was looking down the list of attendees, and I was really happy to see a lot of familiar names and numbers for folks that are part of the LGT family, and there are a lot of new names on the list. So if this is your first time joining us, we welcome you. My name is LaChance, and I am a partner at LGT. I started back in 2007 working primarily with not-for-profit organizations as well as manufacturing and construction. But really, honestly, not-for-profit has been my passion for the last several years. Just don't tell the other industries I said that. A little bit about the firm really quickly. The firm itself has been around since 1950. We do everything that you'd expect out of a public accounting firm, including any kind of tax work for not-for-profits, as well as audits and assurance work. We also do project-based work like controller by the hour or CFO by the hour and monthly bookkeeping. So if your not-for-profit has any particular needs, just be sure to let us know. We'd be happy to help you and see how we can help make your not-for-profit even better. My portion of the presentation today is to talk about how to record the grants when you receive them. The FASB Financial Accounting Standards Board put out some specific guidance related to contributions made and received, and that includes addressing how grants are accounted for. So we're going to talk a little bit about that today. So let me go ahead and jump in. My bio is here, which really just sounds like a eulogy, but the important part to take away out of it is that my direct phone number as well as my email address are on this slide. So if you have questions that don't necessarily get addressed today in the Q&A, don't hesitate to reach out to me directly. I'm happy to answer whatever questions you may have. And then obviously the disclaimer. I have taken parts of this presentation directly from the FASB literature or else directly from the AICPA. They have given me permission to do so since I'm not charging anybody to attend these sessions. It's not for monetary gain on my side, so I get to use the resources for free. Okay, so let's get into the nuts and bolts of the accounting. So FASB addressed how to account for contributions made and received through ASU 2018-08. And from the FASB's point of view, really, what were they trying to resolve by issuing this particular guidance? When the revenue recognition standard was issued in 2014, grants and contributions were specifically carved out, and FASB said one day that they would come back and finish the job, and this is how they addressed it. What they wanted to do was address the fact that there is significant diversity in how different not-for-profits account for grants and contributions that are made. Sometimes it had been accounted for under 605, which is the previous revenue recognition standard, or it should be addressed under revenue recognition 606, which is the new standard that's out. So they also wanted to address when you have contributions, do you have conditions that may be a barrier to recognizing the revenue that comes with that? So they've issued some guidance in here that addresses what constitutes a right of return, meaning if the not-for-profit doesn't live up to the expectations stipulated in the grant, do they have to give the money back? And what happens if those stipulations aren't met? And then also if the likelihood of meeting those stipulations or not meeting those stipulations, is remote, then you can go ahead and recognize the funds. All of this diversity really led to different practices in how not-for-profits recognize the revenue. So fundamentally, if the contribution is absent donor conditions, contributions are recognized immediately, either with or without donor restrictions. So if there are no conditions or barriers to meet, then the not-for-profit just has to consider, do I have donor restrictions, i.e. it's for a specific purpose or over a period of time? Or if you have conditional contributions, those generally are not recognized until the conditions that surround that contribution are substantially met. And we're going to talk a little bit about what those different barriers are and some different metrics that relate to them in just a second. So this new guidance really affects not only not-for-profit organizations, but it also affects for-profit entities that either receive or make contributions. So if you are a for-profit entity giving money to a non-for-profit, this standard, this ASU still applies to you. If it is a transfer of assets from the government to a business entity, that is carved specifically out of this standard. And for those of you who take federal funds and in the past have had to worry about subrecipient monitoring, there is no obligation for the not-for-profit to ensure that the resource provider is applying the guidance correctly. So if you receive funds, if you're an organization that gives funds to another not-for-profit, you have no obligation to determine that they are following the guidance. Each organization is on its own regarding how they are responsible for the funds. And lastly, regardless of what you call the contribution, whether it's a contribution or a grant, a donation, a gift, or a term of any other kind, what really is important is the application of the standard. Applicability and effective dates. All right, so this standard is effective actually for periods beginning after December 15th of 2018. So for calendar year ends, this was effective for not-for-profits during calendar year 2019 or fiscal year 1920, which means for some of you, this is still a standard that you'll be under for audits that you're currently going through right now. For resource providers, which is organizations that are the funding sources, the guidance is effective a year later. So if you're a recipient organization, again, it's calendar 19 or fiscal year 1920. And if you are a funder, then it's a year later. This is applicable to any agreements that are not fully completed at the time of adoption. And of course, any other agreements that a not-for-profit enters into. There are some disclosures. There is no prior period adjustment necessary for incomplete agreements. There's no cumulative effect of adjustments to net assets. You do need to state the nature and reason for the accounting change. So there'll be some narrative that you'll have to include in the footnotes to your financials. And then that narrative disclosure also would stipulate any reasons for significant changes on individual line items. So if you've got a portion of your statement of activities that has a significant change because of this standard, you'll have to provide some sort of narrative description about what that is. So the first test here is looking at the contribution and making a determination between whether or not it is purely a contribution or it is some sort of exchange or reciprocal transaction. And how you do that is the same way that you have in the past. You take a look to see if the organization that is giving you the funds, are they receiving something of commensurate value in return? So we're not talking about small items like tchotchkes or pens or a t-shirt, but if you're actually doing work for that resource provider that has significant value, equivalent roughly to the fair market value of what they're giving you, then what you really have is an exchange transaction as opposed to a contribution. The resource provider is not equivalent to society, even if the provider is the government. So if the government is funding something, a particular project that benefits the community at large, that is not something that is an exchange transaction. Also, the idea of warm fuzzies, if the organization or an individual foundation feels great about supporting your program, that's wonderful, but that is not something that has a tangible value. So that would not be something that counts toward that commensurate value. And I want to put a little asterisk here to watch out for potential third-party payments. We're going to have an example later on that comes directly from the AICPA about this specific topic. But if you are partnering with another foundation to do a joint project with a university for something, for an example, in the one that we have here is a foundation gives you a grant to a not-for-profit to lead a joint project with the university on the effects of race and poverty. The not-for-profit would need to review the contracts that govern that relationship to make sure that it truly is a grant and not just a third-party payment. And like I said, I have a specific example dealing with private schools that addresses something like this. We'll talk about that in just a few minutes. Your second test is determining whether or not that transaction that you're looking at has a condition around it. So you want to determine if that grant that you're receiving is a conditional grant. And to do that, two things have to be present. There has to be some sort of barrier that the not-for-profit has to overcome in order to recognize the revenue. And there must be a right of return that exists. So for example, a right of return must be readily determinable from the contract. So what you'll have is some sort of grant agreement, and in there it will stipulate that if you don't reach a certain threshold, maybe it's a certain level of participation, or serve a certain section of your constituents, if you don't live up to that expectation, then you have to give the money back. Or it may be a stipulation that it releases the funder from having to pay you for something. But that right of return has to be included in the documentation of the agreement itself, either in the body of it or incorporated as some sort of attachment. The FASB was really picky about this particular piece, and what they're trying to address here is that email correspondence back and forth between you as the organization and the funding source, that's not something that's incorporated into the document, the grant agreement itself. So that would not constitute being readily determinable from the contract itself. So this ASU introduces some specific terminology, and barriers is one of them. And barriers come in a variety of shapes and sizes. There are measurable performance-related barriers, meaning the not-for-profit has to achieve a certain level of performance. There may be presence of stipulations that limit a not-for-profit's discretion to conduct activities. So that's something that may require a specific stipulation. Maybe you have to do a research project according to a specific protocol that's laid out, or you have to hire a particular person in order to receive the grant funds. But we'll go through some specific examples of those stipulations as well. And it also could be something that relates to the purpose of the agreement, something that narrows the scope of the agreement. So your performance-related barriers are pretty straightforward. You have to have a specified level of service. So maybe you have to serve a certain number of people of your constituents. The program that you're funding has to have a particular outcome. A really common one is matching. Elly touched on it in her presentation as far as grant applications go, but maybe your funder says, well, I'm going to give you $500,000, but you also have to raise $500,000 in new funds in order to receive it. So it's a dollar for dollar matching. Maybe that's a requirement of the grant that would limit your ability to recognize the full $500,000 immediately. It may also be dependent on some sort of outside event or occurrence. And also watch that some of these grants may have stair-stepped or a milestone approach, meaning that there might be multiple things you have to achieve in order to receive the full amount of the grant. And again, I've got an example that will address that specifically in a little bit. Your limited discretion barriers, these are the ones that narrow the focus for the not-for-profit. They are more specific than the general activity of the not-for-profit itself, or it may restrict the time frame in which these things take place. It may also include a requirement to incur only qualifying expenses, and I see that a lot when you're talking about federal grants. Often they will be reimbursement grants where you have to incur qualifying expenses specifically. Then at the end of maybe the quarter or the end of the month, you submit those expenses and then you get reimbursed for them. So that would be a limited discretion barrier. There may be a requirement to hire a specific individual or adhere to specific protocols as well. Things that relate to the purpose of the agreement are also some barriers that you may need to overcome. It could be that at the end of the grant period, you have to publish a report on the findings of the study that you've conducted. Or if you're building a new building, maybe it has to conform to certain green specifications so that you have a minimal impact on the environment around you. So there may be things like that that you have to consider that could limit the scope of your grant. But it does exclude trivial things or administrative functions. So at the end of the period, if the granting agency just requires that you give them a report on grant expenditures, then that's something that is just administrative in nature. It's different from the stipulation of qualifying expenses. This is just a general report on how you spent the funds. That's more administrative. Also, if there's a requirement that you have an annual report or an audit, those are also administrative in nature. Those are not things that are part of the, that would limit the scope of your agreement. So those are not things that are, they're things that are administrative and wouldn't necessarily be a barrier. So it's a lot of information. And what I've done is we've distilled it down into this decision tree. And what you do is if you start at the upper left, this decision tree will walk you through whether or not you apply Revenue 605, which is contribution guidance, or Revenue 606, which is the new accounting standard for revenue recognition. So at the very first question you have to answer actually is, if the transaction involves giving something or receiving something, but giving something up of commensurate value, then right off the bat, you have an exchange transaction. And most of this guidance will not apply. The guidance under 2014-09, the new RevRec standard, is what you would apply. If you are giving something up of minimal value, de minimis value, like pens or coffee mugs or t-shirts, then that really doesn't, that's not really an exchange transaction, and this standard would apply to you. Then as you walk through the rest of the decision tree, it asks you to take a look at whether or not conditions exist, and then ultimately whether or not you have donor restrictions to apply as well. So I find this decision tree to be a very valuable resource, along with what we're going to dive into next, which is some case study questions. And these are taken directly from the AICPA. So there are a number of fact patterns here. I don't necessarily think that we're going to go through all of them, but I do want to talk about a few of them specifically. The first one here is, for example, not-for-profit A is awarded a grant from the federal government. It requires the not-for-profit to follow the rules and regulations established by the OMB, to incur certain expenses or costs in compliance with rules and regulations, obtain an annual audit, and provide a summary of research findings to the federal government. The stipulation is any unused funds are forfeited and any disallowed costs have to be returned. Several of these things should be ringing a bell with you at this point. Not-for-profit A retains the rights to the findings of the study. And so your first question here is this transaction an exchange transaction or is it a non-exchange transaction? And then the second question you have to take a look at is, if it's non-exchange, is it conditional or unconditional? So I'm going to give you a second to think about that. You want to determine whether or not it's an exchange transaction, or if it's non-exchange, then take it a step further and decide if there are conditions that surround it. And while you do that, I'm going to get a swig of water really quickly. Okay, perfect. So here's the decision. And again, remember, this comes from the AICPA, so please don't shoot the messenger if you disagree. Not-for-profit A concludes that it is a non-exchange transaction, or it's non-reciprocal. The explanation for that is commensurate value isn't being exchanged between the two parties. The not-for-profit retains the rights to the study it conducts. So it's not doing it on behalf of the federal government, it's actually doing it on behalf of the not-for-profit itself. And even though the research that they determine does benefit the public at large, the government's benefit is considered indirect because it's not benefiting the government agency directly, but the overall population. Not-for-profit A should determine, or does determine, that this this transaction should be accounted for as conditional. And the explanation for that is the grant agreement limits not-for-profit A's discretion as the result of the specific requirement that how the assets must be spent. What that is a very long way of saying is the government requires that they spend this on qualified expenses, and they're reimbursed for those qualifying expenses. There is a right of return on this as well. So if the not-for-profit doesn't spend all the funds that it was given, it has to give it back to the government agency. And the audit requirement alone is not a barrier to the not-for-profit recognizing the revenue, because that is administrative in function and not related to the purpose of the agreement. So again, just because the grant agreement requires an audit, that is an administrative function, not something that relates to the purpose of the agreement. So case study number 2 is a local government grant. So not-for-profit B receives funding from a local government to perform a research study on the benefits of a longer school year. It requires the not-for-profit to plan the study, perform the research, summarize it, and then submit the research to the local government. And at the end of this, the local government takes ownership and has rights to the study. Is this transaction exchange or non-exchange? And if it's non-exchange, are there conditions that surround it? So this fact pattern, of course, is pretty different from the federal government one that we just took a look at. Not-for-profit rightfully concludes that this is an exchange transaction. It's reciprocal. They are receiving funds from the local government to do the study, but in the end, the local government retains the rights to that study. So they're doing this on behalf of the local government, which is simply basically an exchange of compensation for a service and study provided. Case study 3 is a private foundation that gives money to a not-for-profit organization in the amount of $400,000 to provide specific career training to disabled vets. The grant requires the not-for-profit to provide training to at least 8,000 disabled vets during the next fiscal year, with a specific minimum of targets to be met each quarter. There is a right of release from the obligation in the agreement if the not-for-profit does not perform and meet the criteria. Exchange or non-exchange? And if it's non-exchange, is it conditional or unconditional? So in this one, the not-for-profit determines that the grant is a non-exchange and it is conditional. So the foundation that's giving the money does not receive anything, does not receive commensurate value in return. And the agreement contains a right of release from the obligation. So if they don't perform the way that they were supposed to, the foundation, the private foundation, is not required to pay the not-for-profit. It also requires the not-for-profit to achieve a specific level of service that would be considered a measurable performance-related barrier. So if they don't serve their constituency of 8,000 disabled vets, then they're not meeting the terms of the agreement and the private foundation doesn't have to pay. Okay, corporate foundation. This one's tricky, so bear with me. Not-for-profit D is a public charity that works with gluten-related allergies as part of its overall mission. So overall is simply to work with gluten-related allergies. It applies for and receives a grant of $100,000 from a corporate foundation to perform research on gluten-related allergies over the next year. The grant agreement includes the right of return, a statement that the approval must be obtained from the corporate foundation for any significant deviations in spending from the general budget, and a requirement at the end of the grant period that the report must be filed with the corporate foundation that explains how the funds were spent. So do we have an exchange or non-exchange? And if it's non-exchange, do we have conditions that surround it? Your answer here is the not-for-profit determines that the grant is not an exchange transaction, which makes sense. It also determines that the grant is unconditional. So the explanation on this is the grant budget included in the grant proposal is not a barrier to entitlement, which means it wouldn't prohibit them from recognizing the revenue, because adhering to a general budget allows for broad discretion. There are no additional requirements in the agreement that would indicate a barrier exists. The reporting requirement is administrative and not related to the purpose of the agreement. However, the grant is donor restricted. So it's an unconditional grant, meaning you can recognize the revenue right away, but it is donor restricted. So there's a restriction on it, not a condition, because even though the overall mission of the grant, or of the organization, excuse me, is to work on gluten-related issues, working on gluten-related allergies is more narrow than the not-for-profit's overall mission. So essentially, this corporate foundation is funding a specific program underneath the full umbrella of what the not-for-profit does. So this one's a little bit tricky. It is unconditional, so you would recognize it right away, but you have to watch for conditions from the granting agency. An individual pledge. Now, we should all be so lucky as to get a $20 million pledge from an individual donor. And that's what happened to Not-for-Profit E. They received a multi-year pledge from a wealthy individual to build a new green building for its operations. The pledge is $20 million payable over 3 years. The initial amount of $7 million is payable upfront on July of year 1 with no associated conditions. The second payment of $6 million is entitled and payable on July 1st of year 2 upon evidence that the land has been cleared, an architectural design has been received, and the proper building permits have been pulled. The final payment of $7 million is entitled and payable upon receipt of a certificate of occupancy. So is this transaction exchange or non-exchange? And if it's non-exchange, is it conditional or unconditional? So on this one, not-for-profit E determines that the amount for the transaction is non-exchange, and then it bifurcates the total pledge. The initial $7 million is unconditional, which they told us right up front. It's payable on July 1st of year 1, but the remaining $13 million is conditional. There are stipulations that have to be met throughout the course of the funding period that the not-for-profit has to perform in order to be able to receive the funds. So the explanation here is the wealthy individual is not receiving anything in return for the $20 million. So it's a non-exchange contribution. The initial $7 million has, they get that without having to satisfy any conditions, but not-for-profit E will be entitled to receive the remaining $13 million unless it overcomes the barrier, the prospective performance barriers. So it's got to have those architectural plans and the proper permits pulled before it can receive that second tranche of $6 million. And then it doesn't get the final $7 million until they have their certificate of occupancy. So this pledge would be bifurcated out and recognized as the conditions are met over the period of the funding term. All right, so my last example. This is one that I was telling you about to watch for when you've got a transaction that doesn't necessarily fit all the right pieces. So student L is enrolled in a private school and their tuition for the semester is $15,000. So that particular student has received a grant in the amount of $2,000 to use towards the tuition fee, and it's paid directly by the grantor to the private school. How does the private school account for the $2,000 grant received from the grantor? The private school accounts for the grant as a third-party payment on behalf of the identified customer in an existing exchange transaction. Okay, so that's a mouthful. But the private school ultimately realizes that the relationship between the student and the school is an exchange transaction. That student is receiving the education in exchange for the $15,000 tuition. The money coming in from the granting agency is simply a payment on that transaction as opposed to a grant to the school overall. So that's how the school would account for it. They would apply it as a payment toward that exchange receivable rather than a grant to the organization itself. So that brings me to my very last slide, but I see that there is a question. Okay, let me take a look at this really quickly. We have a little bit of time left. So the question is, in the matching scenario, can you match as you reach certain levels, or do you have to wait until the total amount? So that is, if the grant is $500,000 and can you recognize 100,000, 200,000, et cetera, or do you have to wait until you reach all 500? That's an excellent question. And it's going to sound like I'm punting on this, but you actually need to see if there is a stipulation in the grant agreement itself. Otherwise, absent anything to the contrary, I would say yes, you can recognize it ratably, particularly if that $500,000 is given over a period of time that goes over one reporting period to another. So if that's going to be given out over 2 fiscal years, I would think at the end of fiscal year 1, you would want to see where you are in relation to that and recognize the revenue appropriately. The only stipulation I think that would hold you back on that is if the grant agreement itself says, no, you can't recognize it until the full amount is earned, then you would have to hold your portion received on your balance sheet as unrecognized revenue until you hit that threshold of 500,000. So unless the grant agreement says otherwise, I would think yes, you can recognize that ratably over the period of the grant agreement. All right. It doesn't look like there are any other questions right now. Again, I'd like to Thank you. I'd like to thank you very much for attending today. Katie has sent me a few quick housekeeping items. If you don't already, please take a minute and follow us on social media. That's where a lot of our information comes out about future events and particular topics. So that is it for us. Thank you very much. We really appreciate you joining us today. A very special thanks to Elly for joining us. This is a great collaboration, and I'm so proud of everything that she has brought to us as well. And we look forward to helping you. If you need anything else, just let us know. Thanks very much.